This video is an update on Solana DeFi for March 2024. I'll talk about my latest strategies for earning yield, points, and airdrops in the Solana ecosystem. Welcome back to Dynamo DeFi. My name is Patrick. As a reminder, nothing in this video is financial advice, and everything in cryptocurrency carries risk, so you should be sure to do your own research before trying any of these strategies. Now let's get into the video. To start, let's talk about the high-level updates on Solana DeFi and where it sits today as of the start of March 2024. On-chain metrics on Solana have just been going nuts recently. If we look at total value locked and on-chain DEX volume, then we can see that they're both at yearly highs. DEX volume is actually at an all-time high, even higher than it was in 2021. And truthfully, TVL is well on its way. That's deposits in DeFi protocols is well on its way towards its 2021 all-time high. And much more of that is backed up by real users this time rather than a few large entities. So things are looking good, and price for Solana is up as well. And keep in mind that TVL is heavily influenced by price. It's very reflexive. That being said, overall, this is good for the ecosystem because it generates a wealth effect where there's a lot more money in the hands of Solana holders, and that wealth can trickle down to other things in the ecosystem. And then DEX volume is also hugely positive for the ecosystem because more DEX volume means higher yields, higher APRs, basically on all applications in the ecosystem, which then in turn attracts more people to deposit and can create a virtuous cycle where the ecosystem grows. And before we get started, remember the first rule of any sort of yield farming, points farming, etc., is you always want to make sure that you actually want to hold the tokens that you're using in these protocols. And what I mean by that is sometimes you'll see new DeFi protocols come out and they have these insane interest rates like 300% APR, 3000% APR. And the reason that those interest rates can be so high is because the token in the pool is highly, highly inflationary. And that doesn't mean that they never do well and that it can never be a good opportunity, but you should always actually make sure you want to hold the token. You think that its market cap is going to go up because otherwise you're just being diluted to infinity. So what I prefer to do is I prefer to find tokens that I actually want to hold anyways. For example, Sol, or maybe even stable coins or something like ETH, and then find ways to use that in DeFi to earn yield, to earn airdrops, etc. Another thing I'll note is that because there's so many people who are airdrop farming now, a lot of these protocols that you basically have to fake volume to airdrop farm, for example, a lot of perp dexes, etc. I'm not going to talk about that so much, although maybe that works for you. There's so many of those are being botted or being used by tons of people. I prefer protocols where I can basically just park funds and passively farm, right? You know, it's about putting tokens you already want to hold to use. With that being said, which opportunities are we going to look at today? Well, the first thing you can do with your SOL is you could liquid stake it, and largest two liquid staking platforms are Marinade and Jito. Some smaller ones are Blaze Stake, and then actually MarginFi, which was a lending protocol, has their own liquid staking token. And I'm going to focus on MarginFi for liquid staking today. I think that that's a pretty good opportunity right now. And then we're going to talk about Kamino and MarginFi, two lending protocols, and Kamino just announced their airdrop. So we'll get into the comparison between those two. And then I also want to talk about the Parcl airdrop, which has been announced, and then a couple other potential opportunities that are coming up. Sweet. So first, let's talk about MarginFi. MarginFi has had a points program going on for a while right now. I've been farming it, I think, since September at this point. And truthfully, you know, they've gotten a lot of flack because it's gone on so long. That being said, I'm still viewing this as an opportunity to pre-farm a token. I still think that there's going to be some kind of reward for farmers at some point, and that the points will have some sort of conversion to an eventual token. Hopefully I'm not proven wrong there, but I will tell you I'm putting my money where my mouth is, and I'm actually still farming this one. And the reason I talk about it for liquid staking is that a lot of people don't know that in addition to lending on MarginFi, they also have their own liquid staking token, LST. So LST stands for liquid staking token, and then it's also MarginFi's version of liquid stake SOL. And as far as I can tell, it actually has the highest APY of any liquid stake SOL, even without any points or future airdrop, right? So even just from that, it's good way to liquid stake your SOL. Maybe it has less liquidity or ability to use it in DeFi than something like JitoSol, but I mean, the APY is great, right? 8.5%. So that's the first thing you can do. You can liquid stake your SOL through MarginFi, and you'll start earning points on MarginFi just for liquid staking SOL. And that's the first strategy that I'm looking at right now. And then second strategy would be, okay, you could take some of your Solana and you could lend it out and earn maybe a modest interest rate, and then also earn points towards future airdrops. And this is where it gets a little bit dicier, because the question is, do you want to lend it out on MarginFi, which actually was the largest lending platform on Solana, I think, until today. Maybe it got flipped yesterday, but or you lend it out on Kamino, which just flipped MarginFi. And the reason why Kamino flipped MarginFi is they just announced that they're coming out with their Kamino token next month in April, and that the snapshot for this is March 31st. And furthermore, they announced that this is going to be a linear distribution. That means that there's going to be maybe not a one-to-one conversion between points and tokens, but basically the tokens will linearly map to points, right? They're not going to do tiers like Jito did, where you just stake a little bit and then you get like, you know, a good portion of tokens. It's going to be similar to if you were yield farming, right? It's going to be completely proportional to how many points you have. And so because they announced this snapshot in advance, and because it's easy to passively farm, you just deposit tokens on Kamino. You can see they've got all these different lending markets here. Then their Kamino TVL is just skyrocketing, right? It was already pretty high, but then look at that. It's just blowing up as people rush into farm. And one of the challenge with announcing it in advance is that it basically takes away a lot of the risk of farming it. I mean, there's still smart contract risk, but you don't have the risk of you're going to park your tokens there for a long period of time and not get a airdrop, or you're going to get an airdrop that's heavily that's sort of tiered or distributed on a logarithmic scale where whales don't get as many compared to how many tokens they have. They're saying no, it's going to be proportional. So now you've got all these big players who are depositing on Kamino. And I actually, I personally still think that because Kamino is so large and because it's confirmed, I think it's a pretty good yield opportunity. And then something you can do if you're willing to take a little bit more risk is they have this multiply pool, which basically does a yield loop where, for example, it's basically taking like JitoSol, it's providing that as collateral, it's borrowing SOL, swapping it for JitoSol, and so on and so forth. And what that is doing is it's basically going to earn you extra points compared to if you were just depositing your SOL straight up. Now, the problem, as you see, because so many people are doing this, the APYs are actually negative, which is not ideal, of course. But the assumption is if you're just doing this for 3 weeks, the APY might be not that significant compared to the points. And so that's a strategy you can do on Kamino if you're interested in this. Again, they do have a points program as well. And then there's MarginFi. And I actually think that there could be an opportunity on MarginFi because so many people are switching to Kamino. MarginFi has been pretty overfarmed, but probably it's becoming a little less overfarmed because people are switching to Kamino. So I'm still farming MarginFi as well. Again, I still think that it's going to be worth something eventually. And so that's the update with the lending protocols. And again, the nice thing is you can just passively farm these. You can deposit something like SOL, BSOL, JitoSol. Recommend doing one of these liquid staking ones because you'll get a higher yield. Another thing to note is that MarginFi has incredible returns on stablecoins right now. Personally, I don't like to farm stablecoins. I think that stablecoin is risk off money. That being said, 17% on stablecoins, USDC, just by vanilla lending it. If you do like to farm stablecoins, I think this is a pretty good way to actually earn points on it. Next airdrop that was announced that I'm also farming is Parcl. So Parcl is really cool. Parcl is an application for speculating on real estate markets. I interviewed the founder on this channel recently. And Parcl, you can farm points for their airdrop either by trading real estate markets, or by providing USDC as liquidity. And they announced a few weeks ago, Parcl is coming in April, Parcl the token, and basically that their season 2 of points was over, they're going to do an airdrop, etc., etc. If you've been farming it, you are likely getting an airdrop. And then they also announced that Parcl Points Season 3 was starting, and this was just this week. So even if you missed this first airdrop, then there could still be opportunities for a future airdrop. And so I'm still farming Parcl as well. Easy way to put some stable coins to work. Yeah, I said I don't really farm with stable coins, but in this case, I'm viewing these as risk on money, right? And so yeah, like to farm Parcl. Next thing that was announced, and this one's a little bit more mysterious, but is worth looking at, is Backpack Exchange announced that their preseason is ending on March 18th. What exactly does that mean? First snapshot. No one really knows, what that will convert to. When will that convert to something, right? Sometimes protocols will do multiple, quote, seasons before they actually launch a token. That being said, Backpack Exchange, Backpack Wallet, the same company that created the Mad Lads NFT, largest NFT on Solana. Might be worth checking out Backpack before the snapshot just to make sure you get in that preseason. Another great opportunity on Solana right now that I'm looking at is the JLP pool. So this is the liquidity provider token for Jupiter's perp.dex, and you can see the APY on this right now, because of the high volume, is 184%. And this token is basically a basket of blue chips and stable coins. It's a mixture of Sol, ETH, Wrap BTC, USDC, USDT, and I think this is a pretty good place. For example, if you want to just buy JLP, I think it's a pretty good place to take some profits into. Right? That's kind of one way I'm looking at it. Is if I want to take some profits from Sol, then yes, this is still 42.81% Sol, but kind of diversifying across the ecosystem and then earning this incredible yield on it. So big fan of JLP as well. And the reason this is so high is simply a lot of people are trading on this compared to the TVL. Final thing I want to alert you to in Solana ecosystem is if you've been bridging to Solana, you may have used the Wormhole bridge, and Wormhole just launched their website to actually check your criteria for the Wormhole airdrop. And I would recommend doing this. If you checked it initially in the first few hours, they had some mistakes, and so it's been corrected now, so check again. But I'll say I found this on several wallets that I wasn't even trying to farm an airdrop on, right? It was just wallets I had used at some point to move some funds from Ethereum over to Solana. And I guess I had used a Wormhole bridge, a bridge that used Wormhole on the back end to move funds, and was pleasantly surprised with the airdrop. So if you've used Solana, strongly recommend checking your wallets, both your Sol wallets and your EVM wallets, for the Wormhole airdrop. And if you want more frequent updates on DeFi strategies and the latest trends in crypto, be sure to check out my Substack, dynamodefi.substack.com. Publish latest trends, on-chain analysis, and tools to help you with research every single week. And for more videos like this one, be sure to like and subscribe. Until next time, this is Dynamo DeFi.